Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Hello, everyone. You're watching the Rant Radio Network.com. I'm Anthony Sykes. This is Cheryl Bohannon. Give us a call at 855-693-4897. Let us know what's taxing you. So how are you today?
I'm good.
All right.
This morning, traffic flowed, and I didn't get stopped at any trains or didn't get ran over by any impatient people who running late for work. Like,
Well,
it was actually a decent ride to get here. Like, yay.
I'm happy for you. That's not my rant, but
I'm
okay.
sorry. I am so sorry. So sorry.
Anyway, today let us talk about what's coming up in the future here.
You have some events coming up, don't you?
Well, those are coming up way in the next month there, but I want
Oh,
to talk about IRS automated tax assessment increase. And
what does
what
that mean?
those are,
What does that
they
mean?
you get those letters in the mail
I'm like, what does that mean? Like, what does that
that
mean?
say you owe this, and you're trying to figure out what this is and why. Let me read you a quick thing here, hot off the press. Tax assessments from the Internal Revenue Service Automatic Underreporter program, and automatic is what you are to keep your attention to, have increased 85% in recent years, although the accuracy related penalties were not always applied according to a new report. The automated IRS automated underreporter program matches income and deductions submitted on information returns such as employers, banks, brokerage firms against the amounts reported by taxpayers on their individual income tax returns to identify discrepancies. Otherwise, they're matching up quicker and more efficiently the 1099s that are issued out against you.
Hmm. Hmm. But then too, you said automatic. So with even with them finding discrepancies, so now you're saying as soon as they find like the smallest discrepancy, I'm gonna get a letter that says, "Hey, you owe this because we found this discrepancy." And maybe there wasn't enough reported in my return for them to say, no, we're not going to send her this letter.
Well, no, it is. If you reported something on the wrong line, you could still get one of these. If you, for instance,
Ooh.
did not, if you,
Oh, like okay, like the guy that reported Social Security as rent.
that's right,
Okay.
that's right. It'll still come up as underreported, and it'll show that he owes additional income, even though it may be there, it may be on the wrong line.
That sounds like another means of just pulling in money.
Well, it means that you ought to know more about what you're doing,
Or you need to
because
work with somebody who knows what they're doing.
that's true. Because what happens is there are less voices to speak to. Remember, uh, IRS had 8.8 million friendly, what they call automatic drop calls, up from 500,000 just a year ago. That means there's less people on the phone. That means there's less people to talk to, and obviously less qualified people to help you.
So you're on
So
the phone like, hello, hello, hello.
you're getting this. You get this message that says,
Call back later
"Our
or
well, yeah,
high volume, call back
well, it
later.
says we are experiencing a high number of calls, and please call back later or tomorrow." And then it goes click, and
It
that's it.
gives you a nice, pretty message and hangs up on you.
That's right, automatic hang-ups.
So wait a minute, you know what? This just I'm just so flabbergasted with all this. So you're gonna send me a letter automatically telling me I owe you money for something. And then when I call to find out what it is, it ain't gonna be enough people to answer the phone and tell me what I owe it for.
That's correct. A newly released report by the Inspector General found that automatic underreporter
That's a
program
bug.
tax assessments grew from 4.24 billion in fiscal 2006 to 7.84 billion in fiscal year
Whoa.
2013,
So that
an
brought in that
increase
much
of
money.
85%.
That money, is that money? Like that's
Uh,
how much money it
yeah,
brought in?
that's the assessment, not necessarily the money. The assessment. Remember, they still got to collect the money. The
Ooh.
program also assessed approximately 708 million in accuracy related penalties. So that's an additional amount. Um,
Technology, man. Technology is just killing us. It's a good thing and then it's killing us. It's killing us. They're gonna find you and they're gonna bill you. Just they're gonna find you and they're going to bill you.
that's right. That's right. So,
Ah! And then you
so
can't even call them and complain about it. You can't call
uh,
and talk to them about it
well,
because they gonna
you,
hang up on you.
yeah, that's true.
What the wreck? What the wreck? That
uh,
is. Wait a minute. What part of the game does make this fair? It's not. It's taxes, so it's not going to be
no, no,
fair.
nobody said it was fair. Nobody said it was fair. It's,
Oh
it's,
my
it's just, just,
goodness.
just how it is,
Okay, so
and
what can somebody do to stay in front of the game with this? And I'm asking because I'm for a better choice of words, I'm like the 1099 whore. Like I'll have like 20 1099s in a year. And what I do is like when cuz some cuz I'm in insurance and investments and stuff, so I get different 1099s from multiple companies. And even me like I will track and input into like a little spreadsheet exactly how much money hits my accounts from the different providers sometimes. And I've noticed sometimes it's a big deal. Sometimes I'm like, hey, if you don't want to tell anybody you gave me this money, that's on you. But what I actually recorded hit my account, and sometimes the 1099 are not the same numbers. It's not it hasn't been like a dramatic difference, like thousands. They're not telling the IRS that they gave me these thousands, but sometimes it's like maybe a $300-400 difference. But I usually report exactly what's put on the 1099 so I don't run into problems. But what does someone who receives a lot of 1099 income do so that that type of automatic letter that's saying there's discrepancies will come? Like should I if I made like 50,000, should I say, "Hey, I made 52." So in the event it's more like there's more, it's over what was actually done, so they can't say, hey, you didn't tell us about this income. Like what do you do?
cross your fingers.
I was like, in the silence is killing me. I'm like, what do you do? Like what do you do to stay keep them away? Like what do you
Well,
do?
no, no, you have to keep track, and it is all up to you to keep track of how much money you get. You get those checks.
You're
You
right.
know how much the checks are. You deposit the checks, and it is up to you to do your own accounting and keep your expenses. So whether you get a 1099 or not, whether that 1099 has the correct amount, and that's what you need to be concerned with. If it's less, most people don't say anything. If it's more, they're going to yell and scream. And the
Oh
only way
yeah.
you're going to know that is by knowing how much you received from each of the people or each of the companies you deal with.
Mm-hmm.
And that is looking, keeping kind of a ledger. You got X from this and X from this and so on. And at the end of the year, you know how much income you had, and it should match the 1099s that you receive or not.
Yeah, some years it does, and some years I'm off by like a couple $100. And I don't know if it's because, on their system, I know one guy, he was like cash based. So even though he bills you in December and you don't pay in until January, he's not claiming that money until January of the next year. Whereas some people are like, well, I billed them, and then I mean, I guess it just depends on when you actually receive the payment, cuz I'll get checks in the beginning of the next month for the previous month. You know what I mean? So I cuz I get like from like Anthem and Word and Brown and all that. I'll get a check that's dated the 28th to 29th, but some of them are mailed. So I might not cash it to the 3rd or 5th of the next month. So I don't know if that makes a difference in when they actually issue the 1099, you know what I'm saying? Or
No,
if
it's
it's the
it's their
date of
their
issue.
their payroll or their billing or payment cycle. So they don't care when you cash the check. because they're going to put it on the 1099 if they issued
Issue
it.
it.
If
Okay.
they sent you the check, and around the end of the year, it could be that that check will go into the next year's payment cycle, so it doesn't appear,
Peer.
even though you may have gotten that check
And then there's
in
some where
January.
they don't give me a 1099. Like,
If it's less than $600, they're not required to.
yeah, some of the dental providers that I work with, I don't, it's dental pays very, very little, but it's okay. Um, but they don't give me one. And then the next year I'll get one. And I'm like, you didn't even pay me this year, but you paid me last year. So, okay. That's okay. So that's why the minor discrepancy. It's not, like I said, it's not like a large, it's not like thousands and thousands of dollars. But just based on what you were saying, I'm just like, I'm just going to report what they said told the IRS. How about that?
Well, you
If
have
they
to.
didn't tell the IRS, do I have to tell the IRS? No, I'm just
Yeah,
playing. I
you
know I got to
you
tell
you,
them.
you have to
Yeah, I
tell
know
them.
I got to disclosure, disclosure,
You
disclosure,
have to tell them.
disclosure.
Um,
So with that, somebody just really needs to make sure they keep proper records.
that is correct. That is correct.
Ooh. So when you get that letter, basically, what do you do? Because it's gonna say, "Hey, you owe this because you didn't state this on your return or that on
Yeah,
your return." It'll be one of those types of situations.
yeah.
Okay.
Well, no. If you get the letter, you have to match it up. It's up to you to prove that you didn't receive it or you put it in the right spot. From their point of view, you are guilty until you prove yourself innocent. And that goes to the Taxpayer Bill of Rights. Number 10, the right to a fair and just tax system.
Uh,
Each and every taxpayer has a set of fundamental rights they should be aware of when dealing with the Internal Revenue Service.
hmm.
And we'll talk a little bit more about that, I guess, coming up after the break.
Wait the break. Oh.
You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back. Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Hello, everyone. You're watching the Rant Radio Network.com. I'm Anthony Sykes. This is Cheryl Bohannon. Give us a call at 855 693 4897. Let us know what's taxing you. What
Taxes. That's fine.
What's taxing us besides her texting is the IRS automatic assessment increases or significantly increased over the last few years. And
How
uh,
much revenue do you think that brings into that entity?
I mean, just that alone was about. Um, it was up. I think they said
You
here.
said five hundred
No,
thousand
no,
to.
that was just the penalties. That
Uh,
that was it was 7 billion, so it's about 3 billion more, roughly about 3.5 billion more.
for people to prove whether it's right or wrong or this.
Well, yeah, yeah, and the whole thing is you have to. You're
That's what
kind of
you were saying.
guilty until you prove yourself innocent.
So when you get that letter, most of the time will it spell out what information they want you to forward back to them to prove that bill is not yours, or like what? I mean, I know
Well,
it would say
no,
this is what you owe and
no,
then
no.
you just
What it
pay it.
says
What?
is you did not pick up this 1099 with this amount of income. If you did, then you have to show that you did. That's all. And it may go away, or if you did not pick up, generally it's stock trades, it's interest, dividends, retirement, things like that, and they pick it up.
Mm.
So the Bill of Rights says the taxpayer the Taxpayer Bill of Rights takes the multiple existing rights embedded in the tax code, groups them into 10 broad categories. And we're talking about number 10. Taxpayers have the right to expect the tax system to consider facts and circumstances that might affect their underlying liabilities, ability to pay, or ability to provide information timely. Taxpayers have the right to receive assistance from the taxpayer advocate if they are experiencing financial difficulty or the IRS has not resolved their tax issues properly and timely through its normal channels. And, sometimes these rights are not, this right is not necessarily um, upheld because people don't know. And IRS or that particular branch or that you're dealing with may proceed to roll and move and so on. But you do have that right. If you cannot pay the debt in full, you have and you meet certain conditions, you can enter into a payment plan with the IRS where you pay a set amount over time, generally on a monthly basis. You can submit an offer in compromise to settle the debt for less than full amount. The IRS has published a list of national and local guidelines covering basic cost of living. The IRS cannot levy or seize all of your wages to collect your unpaid tax. A portion will be exempt from the levy to allow you to pay basic living expenses. Now, what they consider basic and what you consider basic may be
Two different
different.
Benjamins.
The IRS has the authority to abate the unpaid portion of any tax or liability, such as interest, that is excessive in amount assessed after the statutory period of limitations has expired or is erroneously or illegally assessed. That one they don't seem to respect a lot.
I'm about to say with that, like, what is not erroneous interest?
Yeah. This one here, IRS has a discretion to abate interest on an underpayment where an IRS employee caused an unreasonable delay or error and the taxpayer or representative did not in any way contribute to the delay or error.
Oh, that's nice.
Well, that's hard to prove and hard
I'm
to find
sure because
and hard to
nobody
get.
ever wants to admit, I'm sorry, I was wrong.
That's
I
right.
messed up.
That's right.
Most people say it's your fault. I messed up.
Yep.
I didn't. So I really didn't mess up. I didn't really mess up anything because it was your fault. If you didn't do what you were supposed to do, I wouldn't have messed up.
Yep. So those are your rights. And let
What
us let
the?
us pick something out of the past and see
Uh,
what changed. In 1954, the filing deadline for individual tax returns changed from March 15th to April 15th.
why?
I don't know.
Oh,
I don't know.
but
That's just a
like
little
maybe the
known
thought
fact
the
there.
first one at the full quarter of the year.
Uh, no, I can't even begin to speculate as to why.
Okay.
Um, yeah, I don't even know why. In 1961, the computer age began at IRS with the dedication of the National Computer Center at Martinsburg, West Virginia.
Hmm.
Yep. And then in 1965, the IRS instituted the first toll free telephone site.
Hmm.
So you have those bits of trivia, and every show I'll tell you a little bit more of what you didn't know, didn't expect, and probably didn't care about what's happening with IRS. What you have over there?
Only thing I was thinking was when you were telling all that, I was like, I wasn't born yet. I wasn't born yet.
Unfortunately, yeah,
I wasn't
I
born
kind of know
yet.
that. We haven't done the commercial. I forgot all about that. You can always reach us at the office at five
Oh,
six two 864 2341. We kind of just jumped right into this without even talking about who we are, what we do, and why we do it.
okay.
Uh,
Who are you?
Maybe that's a function of no coffee.
That'll happen. That'll happen. So
No
who is
function of no
Anthony
water here.
Anthony Sykes and Company?
Anthony Sykes and Company, we do taxes, tax resolution, accounting, payroll, all that good stuff. But you can go to our website, sign up for our newsletter, and visit us. Join us on what is that? Join us on Facebook, tweet with us on Twitter, and link with us on LinkedIn, all in one fell swoop. Just we'd like to know what your comments are. Okay, that's the commercial. We will be bringing that up a little bit more, but you have something there you want to talk about. So what you got?
It's saying that self-insured employers must file health coverage information for returns. And I guess for the employers, it's the 1095B, whereas everybody else, it's the 1095A. Um, what's been amazing with all of this is this was the first year of the penalties. This I've seen where those corrected 1095. Remember they sent out that one newsletter saying there was a lot of 1095s that were incorrect and they were asking people to kind of wait to file their taxes so they can get corrected forms. Some people never received the corrected forms. And then we even saw where the forms gave people an astronomical refund that we could not understand. And then when they tried to file their taxes, it said, oh no, this information is incorrect. You need a corrected form. So, all that nice pain that individuals are feeling this year looks like employers are going to have to fill it next year because it says regardless of size, all employers that provide self-insured health coverage to their employees are treated as coverage providers, and these employers must file an annual return reporting certain information for each employee that they cover. It does not say if they don't file this information that they'll be fined, but this is the IRS. This is taxes. They're going to find a way to penalize you and take some other money and do some things if you don't do what they ask you to do. So that I'm sure that will be coming very soon.
Well, okay, talk. Let's talk about the insurance. You know that I think there was some 600,000 people who haven't filed, or maybe there's $600,000 that was due to them. I think it's more like 600,000 who could file to get the tax, the premium tax credit. So they should, but they feel they didn't have to file, and so they haven't. And then I also read somewhere where some people paid too much penalty, and IRS is trying to work that out. But
Mhm.
that's coming up
This is coming up for
for
businesses
the
who
next
are,
year.
yeah, so
So,
it's going to get even more, it's going to be even more chaotic with the drop of this. And then I wonder if businesses are going to get corrected 1095Bs or have to, well no, that's what they actually have to file. So there's
well,
something else that I'm sure they're going to have to put on their return for the health benefits. Um
Well, they have
oh yeah.
to keep the payroll records to make sure that the people are either not don't have to don't qualify for the insurance if they have to pay it, or if they are paying it, then how many are full time equivalent employees.
I wonder, my question would be at this point, and maybe this is where I'd probably have to do a little bit more research to just really give businesses a heads up on the responsibilities that they will have when they're carrying medical insurance for their employees. But um, I don't. I'm questioning as to whether or not I know the tax credit you can only get if you get your insurance through the shop porter, like through the portal. Even for individuals, I remember previously, as long as employers had less than so many employees and their average income was a certain amount, that they qualify for the tax
Well, let's
credit.
talk a little more about that after the break there.
Okay.
You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back. Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Hello, everyone. I'm Anthony Sykes. You're watching the rantradionetwork.com. This is Cheryl Bohannon. Give us a call at 855 693 4897. Let us know what's taxing you. If you have a question that you would like us to answer on the air, send me an email at asykes@sykesaccounting.com. Or if you have a tax issue, call us at the office 562 864 2341. And we give a free consultation. I'll tell you when you're getting into billing time, so to speak. We do taxes, obviously, accounting, tax resolution, um,
Business consulting.
business consulting. We help you get from where you are to where you want to be. Join us on Facebook, link with us on LinkedIn, tweet with us on Twitter, and most definitely visit the website Sykes Accounting, www.sykesaccounting.com, and sign up for the newsletter. Hope that you will at least take a visit to the website and see what we can do for you. Now, we were talking about earlier the health insurance, which is coming up, the health insurance initiative, or whatever you want to
Mm-hmm.
call it,
The
for
mandates for them.
the employers. Now that the Supreme Court has all but
Upheld
ruled,
it.
upheld and ruled out any other challenges to the Affordable Care, it's here to stay unless something major happens, and I don't. That's not in the foreseeable future. So the employers now have to pay.
Oh yeah, they have to pay and it looks like they have to report. Luckily it does say publication 5125 gives you responsibilities of health coverage for providers. So I'm probably going to download and Google that just so I have that information. But I'm wondering if employers that have coverage that's not through shop, if they still have to file these forms, because I know right now there are not discrepancies, but there was a conflict where some people were saying, and I know now you only get the credit if you're getting your insurance through Cover California. So whether you're when you're an individual and you want the credit, then you have to get your insurance through Cover California. If you're getting it outside of that, then you're paying full price and you're not going to claim a credit on your taxes. It just you're not going to get it. And so I'm wondering with businesses, because you have businesses that have provided health insurance to their employees long before Cover California came along. So for them, are they still eligible to receive credits, even though that's like one of my questions on behalf of the business, on behalf of the guy, are they able to receive the credit even though their insurance is not purchased to Cover California? And actually, I don't think it is. Like they get the write off, but I don't believe they get the tax credit unless it's purchased through that vehicle, through the shop, through that marketplace. But with that, it sounds like there's going to be some reporting to do. But I'm wondering if this reporting is if you're through covered, or is it the reporting that has to be done, period, because you're a business that falls over what 250, or like two fewer, if you have fewer than 200 employees, 50 over 50 employees. So that would be something that employers need to have somebody make sure on their behalf what reporting they have to do, because this is the information that a provider must report to the IRS will include name, address, employer number, the responsible individual's name, address, and taxpayer ID, um, the name, the TIN, the birth date, if the social isn't available, the program, it says which months, it says which months and which plan the individual was enrolled in for coverage and if they're entitled to receive these benefits. So it's looks like a not a super detailed report, but depending on how many people you have, looks like can be pretty lengthy of what they want to know that you are providing to your employees. And I'm trying to see if it's annually, if it's quarterly. I'm sure this is a way for them to find out if employers are supplying coverage as they're supposed to through these reports. And they're probably going to cross check it somehow with the insurance providers to double check. That way, if you're not, I know those penalties are going to be steep. First, they were saying it's like 1,000 a person, which for some companies, hey, I'd rather pay $500 or $1,000 per person I'm supposed to have coverage for than actually pay the amount of the coverage because it's cheaper. But like individuals, those penalties go up. So I'm sure they're going to go up for businesses too. But I'm just wondering again if it's businesses based on the size requirements versus getting insurance to cover California. So it's a lot of little questions I have just to see what would um what would a company be liable for, cuz that part I'm sure is still in the works because all of this is new. All of this is new. I have clients now that are like, "What's this? What's that?" I said, "Let's calm down. All of this is new. That we have to just find out, ask questions, have documentation because nobody knows and they're creating the rules as the game is being played. They're
That's
adjusting the rules as the game is being played. They're building the website and making it more efficient as we use it. So it's not set in stone, but it's being created as we play the game. So we got to learn how to play the game.
yep, yep. IRS is the one is the agency that has to as their task is to make sure the rules or the law is being followed correctly,
Mhm.
and that just adds another burden upon them as Congress cuts their budget. I find that interesting. So you have fewer people doing more things,
Mm.
and it's only going to get tighter out there. So you won't get the service centers won't be providing the service that they used to provide because most of the people are tied up in either the identity theft department
Oh my gosh.
or they're in the ramp up of the affordable care because small businesses will be um, audited, so to speak, because they want to
Mhm.
make sure that they're
Doing
complying
this.
with this. So those will go up. There'll be more spot checks and I guess on the e-file. The thing about e-file is the algorithm that's used to make sure that it's put in or it's working is in the e-file. So if it's not, it pops out. You get a letter, and you'll get an automated letter that's saying we don't think you're following it, and now you have to figure it out.
Mm.
So it's going to get more and more complex as time goes on. So it's going to
Mhm.
be interesting. It's
Mhm.
going to be interesting. Um,
What do we do?
well, you get to know the small business health care tax credit. And
How do you, what publication is that? I know I do have a responsibilities for health coverage providers. It says publication 5125. And it said large employers should review publication 5196. And that's the reporting requirements for applicable large employers. So that's why I said some businesses are applicable and some are not. And so the question would be, how do you know what is applicable to your company? But those are the publications
well,
5125 and
you
5196.
have to. And then if you think you get the credit, you have to use Form 8941 and follow those instructions. So that's how you are going to determine, or that's if you qualify for it, that's how you take that credit on your taxes. And the maximum credit for, I guess, starting in 2014, which was this past tax season,
It went
it
up to
increased to 50%.
50%.
Yeah.
Yeah. First it
And
was 35,
right.
then it went up to 50, which is huge. I mean, if you look at it, it's like if you're paying, well, not you're paying $100 because I don't even think kids are $100, but if you're paying like 2,400 a year for an employee, you can get basically 1,200 of that back in a credit.
Hmm.
So your true cost, which is still a deduction, is now cut by 50%.
Yeah. Now, there's a couple things you have to do. That 50% reduces the amount of the deduction you can take, but it is a actual credit against tax as opposed to a deduction.
And that's so that brings down what the check I would have to write, basically.
That's right. That's right.
Okay, why? Well, you wouldn't know, but I was gonna say, why doesn't this credit apply to people who have private insurance outside of the exchange, just to get more people to get insurance?
I don't know. That I don't know. I didn't write the law.
I don't know. That's why I was like, you don't know, but boo,
Nope.
boo.
Well, because they weren't sure it was going to. And again, remember, a lot of people had a lot of hands in that, and the insurance lobby is a very big lobby. And they didn't know if they were going to benefit as much as they are benefiting right now. And I would think that if they had seen the future, they would have wholeheartedly jumped in
Hmm.
and put everybody into it. But you have this was such a political football. You had the Republican Party and Democratic Party at odds with each other, and even factions in the Democratic Party that wanted stuff. So it it I guess was good that it even got through.
Hmm.
It's not in the original form that it was created,
No.
but it did get through. So now we have to deal with it. The Supreme Court has said it, and we'll talk a little more about it after the break. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back. Welcome to Sykes Accounting and Consulting Radio Show. I am your host, Anthony Sykes. Welcome, everyone, to the Rant Radio Network Show. I'm Anthony Sykes. This is Cheryl Bohannon. Give us a call at 855 693 4897. We'd like to know what's taxing you. Join us on our website. Visit us at www.sykesaccounting.com. Sign up for the newsletter. Link with us on LinkedIn. Friend us on Facebook. Tweet with us on Twitter, all that good stuff. But even more important, if you have a tax issue, you
Dun
can
dun dun
visit
dun.
that site, Sykes Accounting. We do have another website that you might want to look at, and that's helpforyourtaxproblems.com. That talks about the tax resolution that we do in our business. We don't really talk a lot about that on air, but we do. We do a lot of it.
Woo.
Call us at 562 864 2341. And, if you have a tax question, let us know.
What would you say? Because I know you've probably, years experience. It's been some doozies. What would you say was your most trying tax resolution issue? Was it a person? Was it a preparer? Because I know you also do resolution for preparers too, because preparers get audited
Yes, they do. Yeah, they do.
and they can get audited and they can get fined.
Yeah, that's usually. I mean, they as a person you get audited, as a company you get reviewed, and that can be audited too. But I don't know. The most trying was probably an individual. That was a long time ago. We kept trying to get it through as a an offer, and that was before the offers were kind of streamlined, and we went over and over and over again, and every time we sent it. And one of the things about offers when you submit these, it's not like they uh, uh, give you immediate feedback. It's 2 3 months out sometimes or more, and uh, you then get it back and it says, well, you didn't give us this, and so you have to start all over again and update it and then send it back in. So it can be 6 months easily to a
Hmm.
year before that offer is accepted. Now with the streamline, it's still quicker, but I mean, it's not like a overnight thing where they get it and they call you back and say, yes, we accept it. It still takes weeks as opposed to months. But you now have some other options in there where you can say, well, I'd like to make a payment over 5 payments, or five payments to pay it off, instead of before you only had one. It's either one or
Yeah,
done.
then.
And now it's okay, you can pay this off. If you pay it off in full, we allow you a kind of option there. Or if it's an offer with less than full payment, you still have options to pay. So there's a lot of other different alternatives in there that weren't there a few years ago. And I don't know how long that's going to be around. I suspect because of the recession, so many people got into tax trouble that to really constrict them, it would have probably sent the country into a greater tailspin than it went into.
Hmm. Well, I'm just thankful that we do have a healthcare system that is now affordable for everybody, or can be affordable for everybody, because it was, like I said earlier in the year, it was very disheartening sometimes to sit down and leave a family's home and know they needed the coverage, and insurance companies, because of past medical conditions, would just make it so unaffordable, to where you had to watch a loved one suffer and there was nothing you could do about it because you couldn't afford the insurance. So I'm very thankful that the structure of insurance has changed to where it cannot exclude anyone based on a medical condition. The other thing that I just look at with our insurance, and just with insurance in our country, period, is they make a lot of money at the expense of people being unhealthy. And so that whole champions for change, whether you're trying to drink more water, be more active, have better diets, cook healthier food, like, this won't be an issue, and disease wouldn't be such an issue if we learned how to be a healthier country. And that would really shut insurance down, because at that point we're only paying premiums. We're not using the coverage because we're being healthy. And at that point, as a doctor, I'm not making money at the expense of you being sick. I can make even more money at the expense of you being healthy. And that would be a big shift in how people get paid and what people do, because right now it's easy to be unhealthy. That's almost like those people who run the marathon and they make like 100,000 in 2 hours. Who does that? Like, very elite. It's not the norm. But then after a while, if you have millions of people who are doing it because they believe and know that they can, and then they have the resources to do so, you'd probably have more people in that race. Those percentages would be a lot higher. But I'm at least, well, no, we got to crawl before we walk, but I am at least thankful there's something in place where now we have over 16 million people who have coverage now that couldn't have it before. That's huge. That's not like five. Like, that's huge. I know some of the insurance companies are merging and buying each other out, just trying to combine resources to provide better service. Because I believe it was Aetna bought Humana, and Humana's been around for a while, and then I believe somebody else, Centene, is buying somebody. So then the insurance companies, insurance industry are combining just to. I'm sure it's a better business move in some respects, but then also I'm hoping it's a service and benefit move as well, so that they can combine resources and medical groups and all these different things and be able to supply a better service to people than what was previously done. So we have a lot of shifts and changes, and we're just getting started. It's just getting started. The next 3, 4, 5 years is going to be a big. What's going to happen? It's good. It's it's a game that you can't just close your eye on. It's one you're gonna definitely have to pay attention to, especially around 2017, because in 2017 they're even cutting Social Security benefits. I have to see how, but I read where that was there. That's expected to take place in that year, and
Well,
that's something too.
I haven't seen it. I suspect it's when they say cut the benefits, it is cut the push back the time in which you can um,
We already
collect
almost at 70. They
benefits.
already trying to work us till we die to get our money out of us. And the minute gonna be like, you have to be 72 to get this. Whereas it was in the 50s. I'm like, we're gonna be 80. Like if you want 50%, you gotta be 85 years old. But shoot, if you pumping us with drugs and our diet is horrible, we're not gonna even live till 70. So
Well, when it was created in 1937, the age was set at 65, and the average person lived to maybe 55. So
they always
it
see, they expected you to die before they give you your money. They doing it on purpose so they can keep it and keep it. You don't have to go through probate because we got all your money. That is crazy, and they keep lifting it because they know we not living longer. Get healthy, get healthy, get healthy, get healthy, so you can get your money. I feel like Rihanna. B better have my money. No, I'm just playing. That's the
Okay,
IRS. That's
that's a
the
different political statement
that it
there.
is. That it
Okay,
is.
all right, okay, okay then. Um,
So what else do we have? So that was it for this. We would tell the
well,
businesses to
we,
check those
we,
publications so they don't get caught behind the 8 ball. Because I don't know if there's going to be a penalty for them if they don't file those reports versus if they do. But those two publications will let them know what their responsibilities are. Anything you want to tell them? Because I think we're almost done.
well, in that case, then, if you haven't filed your 2014, I touched on that earlier. Those who get the advance payments should file their 2014 so they can set up and get ready for 2015. And we'll talk more, I guess. We're wrapping it up. I'm Anthony Sykes, Joe Bohannon, and we'll see you on the next show. You're listening to the Sykes Accounting and Consulting Radio Show. We'll be right back.